Good evening, everyone. Today, we honor the brave men and women who have served our country with courage and dedication. On this Veterans Day, I want to take a moment to recognize the sacrifices made by our veterans and their families. Your commitment to protect our freedoms and uphold the values we cherish is truly inspiring. To all veterans, thank you for your service. We owe you our gratitude, respect, and support, not just today, but every day. May this day remind us of your selfless contributions, and may we each do our part to honor the legacy you've created. Hey everyone, it's Ashley here with your latest real estate market update from the Westbrook Realty Group. Thanks for tuning in tonight. I'm excited to share some insights from the recent meeting I attended. There's a lot to unpack, so let's dive in. Weekly rate update. First off, some positive news on interest rates. We saw some fluctuation last week, which we expected, but here's the good part. We actually ended the week with rates better than where they started. It's been a while since I could say that. Rates came down not only week over week, but year over year. We had a 21 basis point improvement just around the recent election, which has a lot to do with the Fed making predictable moves and the election itself helping calm some uncertainty. Stability in the market. Speaking of stability, we know that the real estate market thrives when things feel stable. The election may not have drastically affected rates, but it did remove some of that unknown factor that tends to rattle the markets. When the market feels stable, we can anticipate things like rates and trends a little more reliably. Insights from the Fed's press conference. Chairman Powell shared that inflation is slightly inching closer to the Fed's 2% target. Though it's still somewhat elevated, its subtle language changes like this that the market actually picks up on. He also emphasized that the Fed will stay data-driven, evaluating things month by month without any preset course. This means they are taking a measured approach, responding to real numbers rather than guessing or assuming. Economic outlook and employment. The Fed highlighted that they're keeping a close eye on unemployment and inflation, so metrics like consumer costs and job data will be really critical. For those of us in real estate, stability in these areas supports long-term growth, so it's worth keeping tabs on. Predictions on rate movements. Now, where are rates going next? Most predictions point to rates staying fairly steady for the remainder of this year and into next. Major industry players from Fannie Mae to the National Association of Home Builders are forecasting that will likely stay around the mid to upper 6% range through 2025, maybe even dipping into the high fives as we head into the end of 2025. So, no drastic changes, but a stable, gradual trend towards lower rates. What this means for you. So, what does all this mean if you're considering buying or selling? If you're on the fence, this stability can be your friend. A few clients have already reached out, ready to make a new move, that the election is behind us. And while it's not a full-on rate drop, it's a steady trend that can benefit buyers, particularly if you're weighing long-term financing options. Interest rates and market reaction. With the holiday today, rates held steady at 6.92%, and both the NASDAQ and the S&P 500 have been hitting record highs. This market reaction tells us there's a sense of optimism for economic conditions ahead. Commercial real estate outlook. On the commercial side, we're seeing some unique challenges. Many business owners who secured low-rate 5-year notes during the pandemic will soon face refinancing as their notes come due in 2025. With current rates, this could impact small businesses' ability to secure favorable financing. Fed's next moves. Looking forward, the next Fed meeting has about a 65% probability of another quarter% rate cut, which would further support affordability. There's even some anticipation that rates might drop up to 50 basis points by January if the data backs it up. Final thoughts. As we close out this year and look ahead, stability seems to be the name of the game. The slow, steady improvement in rates and the Fed's careful approach to each decision are both encouraging signs. If you're considering buying, selling, or refinancing, this might be a great time to start those conversations. Reach out if you'd like to dive into the specifics for your situation. In closing, thanks so much for tuning in. I hope this was helpful and always valuable. If you have any questions or want to chat about the market, I am just a message away. Take care and have a great evening.